Hello, everyone. Hi. So we are very, very happy to welcome you to this webinar today. And this is really exciting to see that there are already more than 40 people connected. So it's great to see that so many people are interested in the future of insurance pricing. So this is a really important milestone for us today, because we will present for the first time the results of our global pricing survey. So why did we launch this study? So we are talking a lot about, our clients' priorities, challenges, and also expectations for the future of insurance pricing. But we really wanted to gather their voices in a more formal way. We wanted to shed new light on the trends that are ongoing within insurance pricing today. So I don't want to spoil it, but what really stands out from their answers is really the awaited convergence between actuarial science and data science. So in terms of today's agenda, there will be 15 minutes of Q&A at the end of this session. So please feel free to write your questions in the Q&A at the bottom of your screen, all along the presentations, and we will be happy to answer them at the end. And just for your information, we will record this webinar and we'll send it to you on Thursday, along with the full survey reports. So today, Joanna and myself will be your panelists, and we are both working at Akur8, the next generation insurance pricing solution, boosted with transparent AI. So it means that we leverage the power of machine learning while maintaining full transparency and control over the models that are created. I'm in charge of corporate development here, and I will leave the floor to Joanna, our Chief Data Science Officer, so she can introduce herself.
Thank you, Héléna, and good afternoon, everybody. I'm very glad to be here today, especially that, as you may know, I joined Akur8 very recently, after working over 20 years in the insurance industry. And it's a great pleasure for me to share my experience in the context of this webinar, because I strongly believe that pricing excellence is and has always been an important condition for value generation in insurance. It's even more true in the context of post-pandemic situation and economic crisis. And why is that? Well, insurance industry in all countries is a key player of what we can call economic recovery plan. So it's expected to absorb shocks. And in this sense, insurance companies are facing a double responsibility: supporting its clients with an appropriate level of indemnifications and, of course, quality of services, while having to enhance its prediction capabilities to better face ever-changing risk conditions. I'm very curious how your teams, your companies have dealt with this difficult situation. And even if some of you did perhaps better than others, you may agree with me that these new market conditions would be very problematic. The impact of COVID-19 has dramatically changed how consumers drive, shop, work, and behave in all life aspects. And now we are facing strong inflation and, of course, all concerns regarding climate risk. Some of these changes will be permanent, others will diminish or even disappear in a couple of years. But I believe that the ability to quickly respond will be key differentiating factor in the coming years. This new context also motivates Akur8 to take the market pulse and to collect insurance professions' views to draw early insights about the importance of pricing sophistications. And today, together with Héléna, we are excited to present and discuss with you the result of the study.
Thanks a lot, Joanna, for this intro about the market conditions. So indeed, to give you a bit more context about the survey, so we have gathered the voices of almost 100 pricing professionals across all non-life lines of business and across 34 countries. So it's mainly in Europe, with a strong representation of France, Germany, and Spain. And all respondents almost are pricing actuaries, heads of pricing, or chief actuaries. So we also gathered answers from a few underwriters, a few consultants and regulators. But overall, we are very happy to have such a good representativity of the markets. So thanks again to those of you who have taken the time to respond to this survey. I think it's very valuable for all of us. So now let's jump to the results. So the first key finding in this survey is that for insurers, pricing is really the most important competitive differentiator. We have 81% of respondents who have ranked it as a very or extremely important criteria. So of course, these answers are a bit influenced by the fact that respondents are all actuaries or heads of pricing, but overall, we can really say that non-life insurance is perceived broadly as a price-driven market, and this is true across the globe. And this is even more true today in our current macroeconomic context. So if we look at the data in more details, and this is not on the slide, but we notice that apart from pricing, smaller companies are focused on customer experience. They consider it's very important for them, while bigger companies are more focused on distribution networks.
Yeah, thank you, Héléna. These are very interesting outcomes and in confidence what I have observed recently on the market. As you said, despite different stakes as the distribution networks for the traditional company or UX and customer journey for more recent insurtechs, the predominance of pricing strategy is now everywhere. It's not surprising, but it's something new. It's probably the effect of more difficult and less stable market conditions, as we just said before. I had a chance to observe this evolution, especially in the insurtech circumstances, this last 2 years, where most new insurance companies started with a big focus on the customer satisfaction. But now they are also very keen to work on the proper pricing strategies. Also in more traditional agents-driven companies, invested mostly in the distribution network until now, we can clearly observe a new tendency towards pricing sophistication. So it became quite clear that this is now the new now, and it will be mandatory for insurance industry to modernize pricing tools and processes and place pricing also at the center of all decision-making processes.
Exactly. And also, as you just said, Joanna, so pricing is key for insurance companies to differentiate in the marketplace. And yet, despite this importance, pricing practices are not seamless at all. We still see many challenges remaining and hindering the potential of pricing. So we have asked respondents about the key limiting factors in their pricing processes. And the key limiting factors are data and resources. So as you can see on this graph, many of these challenges are quite interrelated. Both the lack of collaboration and the lack of automation are fueling the lack of resources. And all of these challenges are really typical of manual approaches, which you will see later also in the presentation, are still very common in the market. So Joanna, as you've worked in the industry for years, are you surprised by these results?
Not at all. For me, once again, these results are very symptomatic of the post-pandemic impact, where the data cannot be treated in the same way anymore. The trends are changing and the analytical profiles are more and more difficult to attract in the pricing teams. All the companies are faced with this. The lack of data, lack of time are barriers to innovation. But while some players were better prepared for such conditions, others face it with much higher and unexpected impacts. It's quite clear now that such unpredictable situations can repeat again, and all companies will need to foster automation and collaborations. It will be more and more urgent, I think, to reduce the burden of manual tasks in the pricing teams and be ready to react really very quickly.
It's true, and it's also something that our clients emphasize all the time, especially when it comes to time to market, which is a very, very important criteria for them, factor. So now, if we deep dive into the different steps of the pricing process that you see here on the screen, we can see that the perceived level of challenge is very different for each step. So for instance, the step that is considered as the least challenging is technical modeling. So it seems to mean that technical modeling has democratized in recent years. On the contrary, price elasticity is considered as very challenging because it requires more sophistication. And it's the same for model review with internal stakeholders, the very last step that you see here. It's perceived as very challenging by respondents. So overall, these challenges suggest the need for more powerful modeling tools, which would make it possible, for instance, to leverage broader data sets. But also, it suggests a need for more transparency regarding model outputs in order, for example, to ease communication between the actuarial team and external stakeholders. So, Joanna, do you agree with this analysis? And here, what stands out for you?
Yes, absolutely. I agree, Héléna, and with your conclusions. The right tools, transparency, auditability are key, and all teams are waiting and asking for this. So this is something that is very present in the request of pricing teams. But what is also interesting on the slide you are showing, the result reflecting some inconsistencies, so, I think, because if you look well, technical pricing seems to be very straightforward solutions, and usually the most efficient in the pricing strategy, we all know this. But at the same time, the internal reviews seem still challenging or even very challenging for some of respondents. And I think this is an urgent call for improvement, as it may have important implications on the company result, but also on the pricing team's motivation, what I have seen before in many cases. I have personally met the situation many times and in different cases. And I conclude there is no sufficient understanding that model review is a part of pricing governance and pricing strategy. Therefore, it's a key element to not underestimate.
Thank you, Joanna. It's indeed very important for pricing teams to be able to communicate clearly and easily with their stakeholders. And maybe just one point here to complement what you just said, one caveat to keep in mind is that not all of these steps can be executed across all geographies because regulators' positions vary regarding the authorized practices of rate making. So for instance, in the US, price elasticity would not be relevant. So now, in terms of the categories of models used. So overall, most respondents use generalized linear models, so GLMs, for both technical and commercial pricing. Generalized additive models and gradient boosting machines are still scarcely used, and Excel remains widely used across all key activities. So these results confirm that GLMs and GAMs represent well-recognized and well-understood classes of models, and this is true across all lines of business. They are regarded as a standard. So, Joanna, is this something that is in line with what you've observed in your career? And also, have you observed some changes in most recent years?
Yes, it is. It's very aligned. If I take a step back over 15 years, modeling approaches have profoundly changed. 20 years ago, there were only a handful of insurers who are really good at sophisticated pricing. Today, it has expanded both in terms of size, with small and mid-sized insurers becoming really very good at it, and in terms of line of business, moving from motor personal lines to all personal, and also including very often now small and mid-sized commercial lines. And as you just mentioned, Héléna, the majority of insurance give preference to application of GLMs and more recently the GAMs. It's not surprising, knowing that this model are especially fit for insurance rate making, not only because of the flexible formulations that can be adapted to many typical insurance use cases, but also because they can be easily interpreted. And as we just said, the communications on the many pricing models review is still a bottleneck for many of the pricing teams.
Okay, so then what would be, according to you, the next frontier? What should come next now that the usage of GLMs seems to be commoditized?
It's a good question. So I believe the difference, the game changer, will come from the execution. And an investment in the transparent machine learning could be a great opportunity to shorten the cycle time. If we think about the development of new rating plan, this is the area where a lot of companies have still significant room for improvement. For some of them, we observe the development time of a completely new rating plan. It could take, well, over 6 or even sometimes 12 months. By compressing this time, one can quickly develop and implement solutions at scale. And it will be really very key in the next months.
Yeah, it's really surprising to see. 12 months is really a long time, especially now that markets are moving so quickly. So it's interesting to hear this. So now if we have a look at the tools and software used by pricing teams across the globe. So several observations here. So the first one is that overall, pricing teams are using very diverse tools at each step of the process. So it makes the process more manual with potential frictions and less efficiency. The second interesting thing here is that technical pricing seems more industrialized than commercial pricing. This is not really surprising to us, but it confirms this. And third, if we look at the last step, so the review adjustment step, we can see that there is very little sophistication. But when we look at the market context with conditions that are changing really quickly, disruptive trends, and so on, it would be really important to have more sophistication on these underwriting-based adjustments. So, and on the model review, because it's really key when the market is moving so fast. So finally, overall, what is striking in this graph is that there are very, very few pricing solutions, which is very different compared to other industries. And probably this is due to the specificities and the complexity of insurance pricing. So this is why legacy solutions and even Excel are still widely used across the process. So as you can see, not really disruptive, but luckily, new solutions like Akur8, of course, are gaining more and more traction.
That's right. The market waited for a new solution. And clearly, the survey responses are expressing the general undertooling across the pricing processes. Those who are still using Excel as a pricing tool will be not able to continue with the increasing volume of the data potentially available. So these solutions have to evolve. In the coming years, we would like to monitor this dynamics to see how quickly the end-to-end platforms such as Akur8 can be adopted by the insurers.
Thank you, Joanna. So now, in terms of the frequency of updates of the models, we can see here on this slide that 1/4 of insurers update their technical prices several times a year. So this need of regular updates is even stronger if you look at the commercial lines graph. So overall, this is very valuable to increase the frequency of updates of models because it allows to better monitor and to adjust to market and behavior evolutions.
Absolutely. The changing market conditions will require more frequent pricing updates. Until a few years ago, only very few markets were in this situation. For example, the UK requires price adjustment even on a daily basis, and the majority of transactions in this market are done on the price comparison website. But now what we are presenting here, Héléna, explains how recent changes imply a more reactive pricing processes, also in the countries where until now, dynamic pricing was much less present. It's not always requiring the adjustment of the commercial price on the end, but at least more precise monitoring of profitability and all sales indicators. It is also somehow, I believe, aligned with Akur8's choice to bring the fully automated pricing solutions that seems to be what the market needs.
Yeah, and it's very interesting to see that there are still so many challenges remaining in the day-to-day life of pricing teams, despite the importance of pricing. So what do respondents expect for the future to overcome these challenges? So we've asked them very simply, and when we ask them about their expectations for the future, of insurance pricing, they all expressed high hopes for the convergence between actuarial and data science. So you can see here that 88% of them are expecting this convergence to be very or extremely valuable over the next few years. So this convergence is driven by, first, the challenges that are faced by actuarial teams, and this is what we discussed earlier, but also driven by new market conditions. So Joanna, as you've been working for a long time within pricing and data science teams, is it something that surprises you?
No, it's not a big surprise, and I'm happy to see these evolutions eventually coming. I think nobody is surprised on the market because there is substantial overlap in the skills between the two fields. So in some market and some contexts, the role of actuaries in the pricing area was strongly questioned a few years ago. But I think now it's quite clear that the deep understanding and skills in the insurance area will make them necessary. Nevertheless, data science and new machine learning approaches will likely play a bigger role in the process. It looks like in the next 5-10 years, automated pricing will become the norm. The convergence between both roles will be mandatory in this case. And in this sense, actuaries and data science will need to step into each other's shoes. In fact, in the day-to-day reality, we can already observe that many actuaries, because of their solid background in mathematics and statistics, have slowly transitioned to become data scientists, and for great success in doing so. Personally, I have seen many examples of this in my career, and this is also called for managers. There is many ways to encourage such convergence. You can developing a combined analytical center of excellence, what I personally had a chance to put in place a few times in previous years. You can encourage cross-training and cross-pollination of skills, creating such porosity between both fields. It's also essential to attract and also very important to retain the talents in the company. But also equipping the teams with suitable end-to-end tools will allow them to integrate data science skills into actuarial analytics and not to be overwhelmed by recurrent and manual tasks.
Wow, it's super exciting to see that there are so many opportunities ahead for pricing teams. So in a nutshell, just to summarize the whole study, if we go to the last slide, this survey has confirmed existing assumptions, but also revealed some new insights about the markets. In particular, that pricing is the key competitive differentiator on the market, for sure, but also that there is still a significant gap to bridge towards the full realization of insurance pricing's potential. And finally, that insurance professionals have very strong expectations around the merger of actuarial science and machine learning. So insurers will need to embrace pricing sophistication to uncover the full business value not yet found in current approaches. In a recent report, McKinsey estimates that 2 to 4 percentage points of combined ratio improvements can be generated by implementing automated pricing approaches. And this is exactly the value that Akur8 delivers to its clients.
Yeah, 2-4 points seems to be average, could be even more in some very specific cases. And I can confirm as the previous Akur8 client, such significant impacts. So, but finally, it seems there is an important lesson that we should retain from this survey. Those who rate most accurately win. This seems the evidence. Of course, this is not new message, but something that was very local a few years ago has now become a more global need. And this is quite new and quite urgent. As the industry matures and existing product commoditize, insurance must, and the good news wants as well, maintain a clear focus on improving the accuracy of pricing and underwriting. Of course, this customer satisfaction, digitalization of offers, and many other aspects that insurers are facing are still very relevant and key topics. But insurance will additionally need to outsmart and outperform the competition on price.
Exactly. And there are also some good news here, is that at Akur8, we do offer transparent AI to boost insurers' pricing capabilities and to empower pricing teams to make better decisions faster and to ultimately generate business impact and elevate the pricing team's role within the organization. So many thanks for your attention. We will now be starting the Q&A. And please don't hesitate to also feel free to ask technical questions, because we also have Bruno, our head of actuarial data science team, that can answer any technical related questions. So please feel free to ask anything that interests you. So let me just have a quick look at the questions, and I will ask the first one. So, okay, so we have an interesting one here. It's from what you see with your clients, where do you think clients stand now in terms of the convergence between actuarial and data science? So maybe Bruno, you can take this one because it's related to our clients and you are really in touch with them. So
yeah, definitely. So first thing, hello everyone. So yeah, to that point, between the data science teams and actual teams. So what we see is that yes, this is a trend as we've seen. So it's starting in the in companies. It's something that pricing managers want to push for, but this is definitely something that is not yet done. So that's something, again, that's in the process of being done. That's something as well where we believe that Akur8 actually helps for our clients to get there, the sense that it gives a common modeling and business framework. And that's true not only between data science and actuarial, but I think also between actuarial and data science, so the modeling predictive part, let's say, and also other business stakeholders.
Okay, thanks a lot, Bruno. It's very clear. I see two questions also in the chat that maybe we can answer quite quickly, but somebody is asking, did you notice any trends that were different across countries? So we have a question about the sample size. So we interviewed 100 pricing professionals across the world in 34 countries. So it's a quite representative sample of for this survey. However, we didn't go into the detail of geographies because we think we would need still a higher number of answers in some specific geographies. So let me just have a look quickly at the other questions. Okay, so we have a question. Let me see. Sure. Sorry, Bruno. Yeah.
Yeah. So we have a question regarding yes, if we have any experience in Australia and if we notice any trends across different countries. So first of all, so yes, we do see very different patterns from countries. I think it's linked in general to both the regulatory aspects. So of course, in some countries you have to push the rating structures before you publish them. You have to file, like in the US, for instance, or in some countries in Asia. In some others, it's more from a pull system. So the regulatory framework itself is an important aspect. The cultural aspect also is something that in some areas the clients are more keen to use certain techniques. In some areas, there is a fiercer competition on price alone as opposed to brands. So really you see those different conditions which drive different ways to react in different ways to work for the different customers. And so to answer the beginning of the question, so in Australia, we're not yet present. We're having some discussion there, but no client at the existing client at the moment.
Okay, thanks a lot, Bruno. So we have other questions waiting. I don't know, you can see them, Bruno, I think, also.
Yes, so yeah, another question. Do you think machine learning or data science solutions will find application in commercial lines where there is usually very little data and it's hard to model anything. So the answer is yes, we do think it has applications, and it does in practice because we have actually a substantial amount of clients working on commercial products. So of course, to the point of the question, there are some areas where it is very, very hard, said by essence, to actually build predictive models because the data is scarce, as one mentioned in the question, and because I would say the underlying assets are very inhomogeneous. For these, that's true that typically an underwriting way, a way to price that is more underwriting based would make more sense, as it's been done in those cases. However, in a lot of other areas where the data is homogeneous enough, we can actually model, and again, it's being done. So, for instance, commercial properties, fleet, can be like very prime use cases to actually use ML data science solution. I don't know, Joanna, if you want to add to this one.
For the commercial lines, yeah, of course, and it was already proven, if even much more suitable to go for such solutions because there is a lot of variability if you have very different models. So having the tools that giving always the same solutions is good, even you don't have a lot of data. So, but it puts some credibility of some variables, and this is very suitable to put in place. Always, of course, depending the of the data, this is something that any tool can overcome. But globally in the commercial lines, we have seen already usage of the GLMs, and Akur8 is dealing very well with these lines.
Yeah, thank you, Joanna. Okay, so another one on the are there any US insurance companies using Akur8 for pricing? So yes, we have actually here again across the board. So we have clients in both the personal lines, commercial lines. So again, mostly for like a bit of specialty and small commercial, and also a few actual consulting companies.
Thank you, Bruno. Thank you, Joanna. So we have also other questions around how do you see the situation evolving between open source and proprietary software?
Yeah, so I'll take this one if you want. So here, yeah, it's actually a discussion we have quite often. So yes, we can do a lot of things in open source. There's some flexibility, you can build things. However, it's also a mistake to think that because you can do a lot of things, that comes for free. Because the first thing, it's usually quite costly to create those frameworks in a robust, reproducible way. Sorry, so to create and also to maintain. So of course, to maintain a code base, make it evolve, make it robust, make it, I would say, robust to changes in people as well is hard. And that's typically the job of a software company. So with and all this is, I think, amplified by the fact that we work in a context where the resources in terms of skills of people are actually quite scarce and quite expensive.
Thanks a lot, Bruno. And we have two other questions I think that we have time to answer. So there is one about external data and one about the evolution of the role of actuaries. So the one about the evolution of the role of tariff actuaries is, with all of these new developments and automation in place, what will be the role of tariff actuaries? What will be the added value, with the exception of deciding, of course? So I don't know who can take this one, Bruno or Joanna.
Yeah, I'm happy to. If sorry,
go on, Bruno. Please go on. Yeah.
Okay. We can add to it afterwards. So yeah, I think the automation in the end is never gonna really replace anyone. That's really the idea that a lot of the job you can a lot of part of the job can be automated, but it's always, if you can use any technique you want. If you do things in a weird way, if you do what you're trying to predict, the way you set up what you do, the way you control the outputs of what you do. So there is still these big parts of the job where it's important to be, in a sense, a good modeler. It doesn't mean you have to recode everything, to redo everything by hand, but you have to know what you're doing from a statistical standpoint and from a business standpoint to be able to go and make a model that makes sense. And for that model that makes sense, to also go on and take pricing decision. So I think if you, in a sense, yes, it comes down to deciding somehow what's the right model, what's the right to configure, what's the right technique to use. But in a sense, it's really just making our lives easier as modelers, as pricing actuaries, versus just redoing everything by hand, where automation can help.
And perhaps I can just add here that I have seen many times actuaries leaving because they are lacking automations and they do always the same things manually. So automation doesn't mean that we will run the black box and everything will be done by the machine. Automation at Akur8 means that the manual task will be replaced and the actuaries will have really very important role in the pricing, but also in the way they are explaining what they see in the data to the executive and in the company.
Indeed. Thank you so much both for this answer. And I think we have time maybe to answer two more questions. So we have two questions that are a bit related about the lack of data. So how do you see companies overcoming the lack of data as a challenge in pricing? And another question about the link to external data in Akur8. Is it up to clients to find external data, and do you offer services at this level?
Yeah, so maybe I'll start to add to it. So first thing regarding so what we do with the external data. So we don't act as a data provider. So typically our clients would find data sources, so external ones, buy them or scrap them somehow, and then put them into the tool. Where Akur8 can help, and once again, the hands of the users who are actually building the models. The idea is to have to be able to quickly go through those external source of data sets, external source of data, and understand which ones can actually bring value, because it is costly. So one thing already to get external data points in a one-off way to make it stable across time and to get that information in a reliable way for future pricing exercises is also tougher. So if you do it for something that doesn't bring value, it's lost time and it's lost money. Also, it's typically can be a bit this kind of data set. Sometimes you can buy a bit of everything, so you're going to end up with a lot of features. And only a few of them are going to bring value. And here again, we can help. I mean, Akur8 can help making that easier. But again, we don't provide data sources as such. I mean, now to the second, to the second point of the question. So how to overcome the lack of data as a challenge. So I think there are some bits where it's really hard to address. In the case where it's really that you have few data points, meaning that it's the business itself is either very small or with very heterogeneous data points. In that case, I agree there's something a bit more structural in the way that data is lacking, and that's tough to overcome. In a lot of other cases, data is missing, I would say mostly because it's either not collected, it's even not collected. One typical example is we can see that in most countries where, conversion, retention can be modeled and those models can be exploited, we see that not always the data points at different points in the conversion channel conversion funnel is actually saved and exploited. External data sources regarding to consumer behavior, consumer demographic is not necessarily probed that way. So these can be collected, again, tested and added when they bring value. There's also, I think, one last maybe structural point I can see in that idea of just lacking data. It's for growing businesses, and that concerns, I think, mostly so even new products, either like, let's say, new businesses, like thinking a lot about insurtechs, as we have some clients who are in that space as well, where obviously the book itself is quite small because they're starting. So there, it's really more how do you transition that phase from the place where the pricing is mostly, I would say, designed to where it's going to be mostly data-driven. So in that cases, TPD could start to really work more in an expert-driven matter. And then as data comes in, as claims are coming in, not too quickly, we hope, as conversion information is coming in, then you can transition towards something that's designed top-down to something that's more data-driven over time.
Okay, very interesting. Thanks a lot, Bruno. And I think we have time to take one more question. So the question is, it would be very interesting to see the split for traditional companies and online companies to understand their different behavior with pricing model and techniques, mainly on the motor business. So I don't know if Bruno, you want, or Joanna, you want to share a few thoughts about the difference between online companies, direct insurers, and traditional companies. And also, let me just remind that we will send you the full survey report, so you will find a bit more insights about the pricing practices per type of player.
So perhaps very quickly, and Bruno, you can add something if you wish. I worked in both traditional and direct companies, and of course the needs are not the same. However, what was applied for direct before, it's more and more obvious as well for the traditional companies, because they need to understand what they are stand, and as we have seen with COVID, but with the inflation as well, if the competitors coming to the markets, they need to go closer and closer to what did the direct companies. The frequency of changes will be not the same, but they need to have the tools to monitor at least. So of course there is some difference, but one is evolving even quicker. Traditional companies are evolving even quicker now than the direct company, that they are pretty high level of the sophistication, at least from my point of view. I don't know, Bruno, if you have also the chance to compare both markets.
No, I agree. And I think it's also the case for something like we talked about commercial before, and we said that commercial is usually thought as being say more challenging, and it's a bit harder to be let's say data-driven and flexible in some areas, which again is true in the specific the pockets of the business. But for some of them, you actually see players really taking to their hands to change things quickly and try to adopt some of the I'll find my words, some of the techniques and the habits, I would say, that are more usually thought of as coming from direct. And I think it is important because obviously it's hard to take this kind of bet, but I think in some countries really going through an intermediate business is really entrenched in the way consumer buys. So that's really important that these not to rely only on direct, but also to make the non-direct business more sophisticated.
Thanks a lot, both.
Héléna, if you agree, I will just answer the last one.
Yeah, sure.
Very
Go ahead.
quickly.
Yeah.
So what can stop actuaries from escaping from insurance into machine learning? Like you said, after doing the same things a dozen times, won't they feel bored? So I have seen the situations many times. I think a lot of managers are experienced this. So I think there's few aspects. Yes, they will feel bored. They would like to do still something new. So it's not possible because we need also some stability, especially we have very, very big portfolios. Second thing is that once they converge with the actuaries, so they have a lot of more actuarial data science and actuarial knowledge, they understand that this is not really suitable to go for such dynamic in black boxes. But the most important point is they are never able to explain it to the executive committee, and this is something that is not possible to overcome. And they understand very quickly that the linear model, GLMs, GAMs now are much more suitable in the process and are not causing so much troubles when they come with the model and they cannot talk with the executive. They have no clue about the data science, actuarial stuff sometimes, and just need to understand the impact on the main indicators as the business GWP or conversion or retention. So I think that's, yes, it's something that is very punctual, very not something that we see now in the market as the new trend.
Thanks a lot, Joanna. Well, thank you so much to all of you for attending this webinar. We'll send you the full report on Thursday, as well as the recording of the webinar. So you can reach us at the addresses that you see on the screen, because we didn't have time to answer all questions. So don't hesitate to continue the discussion offline. And also, if we go to the next slide, we also are present in ITC Vegas next week. So if you guys are present and you want to meet our teams in person, please feel free to drop by our booth. We will also be co-hosting a workshop with Milliman, and as well as a reception. So please get in touch. And well, many thanks again to all of you. It was great, and it was a pleasure to host this webinar. I hope you enjoyed it. So have a great week, everyone.